Good morning, everyone. Hello and welcome to the weekly commodity audiocast. I am Kainat Chainwala from Kotak Securities Commodities Research Desk. And like in every episode, we will be navigating through latest developments in the commodity markets, events affecting market sentiments, and explore the latest trends in this dynamic world of commodities. Last week, market sentiments turned optimistic, buoyed by the high likelihood of a Federal Reserve interest rate cut in September. Dollar slipped to a 5-week low of 104.04 as deceleration in US inflation following a weak jobs report at the start of the month heightened expectations for a Federal Reserve rate cut, with traders now pricing in a 94% chance of a rate cut in September. Also, Fed Chair Powell, in his testimony, acknowledged the cooling labor market and progress in taming inflation, emphasizing that the central bank doesn't need inflation below 2% before cutting rates. Although Powell was careful not to offer a timeline for interest rate cuts, which investors are now betting will begin in September. Meanwhile, San Francisco Fed President Mary Daly expects further easing in price pressures and the labor market to justify rate cuts, while Chicago Fed President Alston Goolsbee believes the US economy is on track to achieve 2% inflation. So inflation figures in the US were better than expected as headline inflation slowed more than anticipated to a one-year low of 3.3% in June, while the annual core measure dropped to a three-year low of 3.3%, pushing US equities to new record highs. Index for gasoline fell 3.8% after declining 3.6% in May, more than offsetting an increase in shelter costs. COMEX gold prices crossed the $2,400 per ounce mark and jumped to $2,430 per ounce as signs of softness in US labor market and ongoing disinflationary trends improved the conviction that Fed might pivot to rate cuts soon. This sent 2-year and 10-year US Treasury yields to the lowest levels since March. Along with shining gold prices, silver also gained momentum and breached the $32 per ounce mark. However, the white metal erased all gains and closed just above $31 per ounce, around 1% lower for the week, owing to weakness in the metals counter. Technically, on the 4-hourly chart, MCX Gold August has given an upward breakout of its double bottom chart pattern, affirming bullish control. In addition, on the daily chart, price has closed above its previous swing high of 73,149 rupees. Next resistance for the counter is placed at 73,780, above which major resistance is placed at 74,400 rupees. LME base metals remained under pressure as market expectations for a policy turnaround from the third plenum remained subdued, while Chinese trade data highlighted lackluster domestic demand. Copper continued to decline last week as stocks at LME warehouses rose above 2 lakh tons for the first time since June 2021, and contango in LME cash to 3-month forward surged to $161.4 per ton. Moving on to crude oil prices dipped below $81 per barrel earlier in the week as concerns about supply from Hurricane Beryl eased without impacting US domestic crude oil production. However, oil prices rebounded sharply to $83.74 per barrel and nearly erased the weekly decline, supported by indications of improved fuel demand in the US during the summer travel season and expectations of an imminent Fed policy pivot. Furthermore, the EIA increased its 2024 demand estimate to 1.11 million barrels per day from 1.08 million barrels per day, and OPEC maintained its strong oil demand growth forecast of 2.2 million barrels per day for 2024. In contrast, the IEA lowered its 2025 oil demand growth forecast to 980,000 barrels per day from 1 million barrels per day, citing weak consumption in China. On the daily chart, MCX crude oil July futures witnessed support near its ascending triangle neckline support, which was in confluence with the 20-period SMA, currently hovering around 6851. Next resistance for the counter is placed at Rs 7150, above which major resistance is placed at Rs 7420. So now looking forward, US retail sales figures due this week are expected to decline 0.3% month-on-month in June, as per Bloomberg forecast, and anticipated to reflect yet another month of weak spending owing to slowing average hourly earnings growth and consumer caution. Besides, ECB policy meeting will be closely watched for hints on the timing of the next rate cut, although it's almost certain that the Fed policymakers will leave rates unchanged this month. Metals may continue to remain under pressure as key economic indicators from China may underscore slowing activity. GDP is anticipated to decrease to 5.1% in the second quarter. And similarly, industrial production, fixed asset investment, and retail sales are all expected to show declines for the month of June, thereby indicating a very patchy economic recovery and hurting demand prospects for the metals. However, all eyes will still be on the once in a 5 years key political gathering, which is from July 15 to July 18, the third plenum in China. And as to markets will see how China addresses the renewed issues of renewed trade tensions, a persistent property crisis, and a thriftier consumer base. Although there are very high chances that China may avoid commenting on the said issues, as the event primarily focuses on longer term political and economic reforms. On that note, we conclude this session of Commodity Audiocast, and we trust that we've offered you valuable insights. Thank you so much for tuning in today, and we eagerly anticipate your presence with us again next week. Until then, happy trading. Thank you.